Mentioned that 2023 has been a year of ulta pulta. Like power has come back, defense has gone higher, some quality stocks have gone down, PSU banks have gone up, private banks have gone down. So I want to understand from you, Mr. Avasthi, that is this story gonna continue in 2024 as well? And where should investors actually park their fresh money in 2024?
Yeah, there have been some changes, but we have to understand that the changes were there in the offing actually. Typically, if you talk about PSU banks, what happened there was most of the regulation was there. The GNPAs were pretty high. From there, improvement had to happen. The regulatory framework was very strong. The weaker banks were merged into some amongst themselves and formed a much larger pair. And post that, the GNPA pickup was not there, where advances have grown over the last 6 to 9 months. So the GNPA numbers look very addressable. And with the current regulatory framework in place, the probability of having again abnormal GNPs of 6-7% at least in the next 2 to 3 years looks like a very remote possibility. So for banks, that has worked out. BSU banks always underscored private sector banks because of the asset quality concerns that they have. Now that is behind us. Most probably, PSU banks will also score at a level playing field along with private sector banks in terms of GNPAs. And on the service side, also most of the internet-related issues that they had in terms of technological advancements. That is also they have looked into, and that also they have come to pace at par with private sector banks. So I think both these things have helped banks very positively. And I think banks have had a fantastic run. So the frontline banks, maybe SBI still has some more leg to go on the PSU side. Rest of the PSU pack, I think they will have to prove in terms of numbers and credit costs that they are going to maintain this tempo over the next 1.5 year. And over the 2-3 quarters, as you see those numbers, maybe there could be some re-rating, but it would largely be based on a price to book re-rating for these private sector banks. So SBI would remain my top pick. And I think that is a story that will continue to do well in next year also. Defense, again, the offset clause kicking in, and finally people seeing it happen in terms of the order book escalations. If you look at most order books, uh, one or two big orders have the potential to really inflate your order book by 2 times. And that obviously results in your future sales also growing. So I think that is a story that is going to continue over the next year also, because if you look at valuations, I think most of the stocks are trading at about 18 to 20 times. Even HAL has a similar valuation right now. And the possibility of existing orders going up as well as international opportunities opening up for these companies is humongous. And I think as gradually we see that happening more over the next 1 year, I think the defense stock should find their peak valuation somewhere around the next year. So I think even next year you should continue to hope. Defense certainly would continue to be a story to play over the next year as well.
If you like the video, do like, comment, share and subscribe.